Alrighty, daily trading recap. Let's get right into it. Let's mention some dollar volume for the day here. First, we are 2 hours, 18 minutes after the close here. NASDAQ, $372 billion volume on the day. NYSE coming in with $558 billion volume on the day. Crazy to see. I think it's the biggest I've ever seen since I've started looking specifically at this market volume. OTC's $2.9 billion volume on the day. Good to see. Big recovery day today, looking at 1.5% in the green after a hard after-hours move coming from yesterday. This on SPY specifically. Diving right into the only trade that I had today, not going into, trading any small cap or equity stock or OTC's ticker that way, just fully focused 100% still on this futures-based trade that I've been diving into and absolutely nailed it today. Came in knowing that Thursdays, for some reason, on the longer-term scale for the all-time data that I have, Tuesdays and Thursdays, for some reason, end up producing more consistent at a larger volatility spread within the first 15 minutes of market open. But in the more recent times, Tuesdays and Thursdays even have a less percentage of smaller volatility of both above and below the open price or open points contract size, whatever, in the recent 50 days and especially in the last 15 days as well. So knew that coming in, especially after a hard gap down. These days, for some reason, the data that I'm trying to find or that's trying to use these parameters of, hey, if we get a hard gap down move in after hours or even a great gap up, what are the percentages of the average open to low if it's a hard gap down day or the open to high? Or most of these days, do they become trend days? Do they just end up churning around? But I'm finding in my recent recollection, it feels like there's a lot of charts like this of after a hard gap down, it just becomes very green trend days that just have zero impact really below that open price. But for some reason the data that I'm just finding now isn't really coinciding along with that, what I'm seeing in my head, my hypothesis for that. But do more data collection on that. Either way, getting to the individual trade that I had itself, starting off with that spread trade coming off of yesterday, where I tried to play it the same type of spread volatility trade of looking for, hey, I'm looking for 3 points above or 3 points below that open price. And once I establish myself, get a position long and short through ES and MES respectively, and then play it, put in limit orders above and below and just let price run into me based on the backtesting and the little data piece that I've done there on that first 15 minutes of market open. And sure enough, today I came in yesterday I was trying to play this mind game of, I'll get long and short at the open, but when it gets kind of toppy, then I'll look to sell my long, and then as it starts to peel underneath that open price and come to the short side and looks like it's kind of petering out, then I'll go ahead and cover that short contract that I have. That worked absolutely atrociously and screwed myself over and rode myself into the type of trading that I don't want to do whatsoever. And that's this emotional, scalpy, non-substance-based form of trading that was reflected in that style of exiting the position from yesterday for this initial spread trade, that I'm going after. So today, coming in with that spread trade that I definitely want to focus on harder as we still have these volatile times, and GEX, the gamma exposure is just crazy to the low side. Need to be as algorithmic as possible, not allowing any room or variance for playing guessing games or in this, but coming into saying, hey, I'm live or dying by these specific numbers. If they work out, great, because I have these variables and I have these risk ratio percentages. I'm not here to play guessing games or try to pick precise tops or fool around with that. This trade is based specifically off this data, so I'm going to go specifically off this data, and that's entirely what this trade has to be, and that's what I came in looking for today. Looked for 2 points above and below the open price, was able to get it within that first minute. Sweet, nailed. Take my $200 because I'm trading 1 ES contract and 10 MES respectively, getting my 4 points of that, and then just moving on saying, sweet, that is the free money that has been perfectly laid out that, okay, this is what I feel has been defined that I've been seeing or picking up for the past few weeks now, trying to get in more with these actual trades, trying to learn how to trade futures initially within those first few weeks. But that was that first trade. Awesome, nailed it. Then I sort of felt myself move into this mentality of, all right, now I can go into the mentality that I had yesterday of, okay, I'll take 1 MES contract and I'm going to be directional with this one. I think I'm going to go short here. So yesterday, like I did, I feel like I did last week as well too, going long or short with one MES contract and saying, okay, now I'm going to be directional. I'm sizing myself way, way down, but looking for the bigger move and using very, very short scalpy cuts for this contract of Blaine. Worked out pretty nicely yesterday on that little MES contract, and of course had way more room on that day. And then same thing today of, as I got out so early within the first minute of market open on that spread trade, then coming into today of, okay, now that's my mentality was just almost immediately shift. Still within the first 15 minutes of market open, now I'm thinking, okay, now I got to be directional. Now I can have that opportunity because I've been freed up. From these little trades that I've been doing, it normally takes that 15 minutes to skew however far above that open price and then however far below the open price to hit my spread. And then that time frame ends up working out where that kind of fizzles out all the just jostling and volatility out of the gate, and then the directional plays start to come from there. But that sort of time frame didn't work today, whereas I get out and I still have and I knew it in the back of my head too of, I cannot be starting to take directional plays immediately out of gate here within the first 15, 20 minutes, 30 minutes even of market open. That's not when these fully directional plays start to come about. We're still in volatile times, but yet, even with that voice in my head, I just kind of denied it and went long one or two MES contracts and got, fizzled out there. I think I actually took away all that I was able to manage to lose all that $200 that I had just got with that spread trade and said, okay, well, that's the reason why I get these spread trades is so I can have the freedom and leniency to kind of test myself and go about these things. But then I said, okay, that's stupid, and managed to then go long or short one ES contract and get 2 points back or 4 points back, whatever. I think it was in one of these moves to the upside, and said, okay, I'm done. I'm back to where I was at the start. I'm done pushing buttons. I can't do this anymore. This is very stupid trading and scalping. I have no metrics for this whatsoever. These are not substance-based trades. They're very stupid, and especially with the SPY, S&P 500, I am gone with the wind with these trades of what I do. So I walked away from the computer, started making breakfast, then I come back and started seeing some other little price action, some candles like, ooh, I think we could go long here. So still with that ES contract through the modality of the ES, then started to play around a little bit more. And then sure enough, I lost all that $200 again. And then I was like, okay, well, yeah, it's whatever. I probably shouldn't be doing this, but, and then it's just like, well, it's just an ES contract. It's very easy to back up that $200. It's, we got to dig ourselves back out of this, right? And sure enough, then those very small losses and like respectable cutting losses quickly, how you could apply this to a small cap trade of, if I'm looking to go short here or whatever, like just for reference of, if I'm thinking this is the top here, okay, I'm now playing for the short at this break. Okay, now it's spiking to new highs here. Okay, as it's breaking this candle, I'm going to go ahead and cut that contract. But that's ended up being like 3-4 points. And then those just start to pile up again and again. And then I'm thinking, oh, now it's spiking against me. Now I got to go to the long side on this. And then sure enough, start picking the tops on those and then selling the bottom, screwing myself over in and out, time and time again. And sure enough, it compiles to end up being, goes to $500 at one point. And I'm like, oh my gosh. And I'm just throwing a fit at that point thinking, this is just stupid trading. How did I get myself into this situation? Then the thought comes into my head of, if you're trying to get out of a hole, put down the shovel. I don't know where I remember that quote from or who that originally originated from, but that quote just started ringing around in my head of, if you want to get out of the hole, put the shovel down. And then I'm trying to rationalize that in my head of, okay, yes, it would seem very illogical to just continue to try and blast these and non-substance-based trades of just trying to get back to break even with these little scalpy 1 to 2 minute, 3 minute ES trades. And then sure enough, by the time I keep trying to do that over and over again, just looking for, if I could just get 5 more points, if I could just get 6 more points, I'd be back at break even, it'd be fine. Sure enough, then I end up like at $750. I'm going no in the red, and I'm going, no freaking way. How did I end up here? Okay, well, we got to get to work. We got to get ourselves out of this hole. And then sure enough, over my stupidity, okay, I got $100 back. Okay, we got 2 points back. Okay, we can work ourselves out of this 2 points at a time. And sure enough, trying to pick more tops, end up down in the red, $1,100, $10.60 I think it was at the final. And I'm probably using like $100 plus in commissions by this point for how much I was going in and out. Idiotic trading. and it's not going to happen again. And I want to criticize myself to say, how can you be this far in your trading career, year 4 months maybe at this point, and say, how can you be taking these stupid trades that you know you shouldn't be taking? This is breaking your rule set. These aren't substance-based trades. I have no real conviction. I am not respecting any amount of risk reward whatsoever. I'm just kind of slinging, hoping I can get like 4 or 5 points immediately from when I enter to when I exit, and within minutes. Very, very stupid trading all around, first off, just trying to do that in general, and then trying to dig myself out of that hole by digging an even deeper hole that way. And especially for how choppy this whole morning session was. We can look at, obviously, a full green day sentiment throughout the day, but just in these little individual candles of how we chop in and out. Big learning lessons today through that, and paying $1,000 for it. It is huge in respect to what I should be looking for my wins. But yeah, it's just not respecting risk reward on those little stupid scalpy trades, and it's not something that I want to be a part of. I won't stop myself going forward from taking on a day like this where I got my one MES contract short and saying, hey, I think there's going to be a downtrending sentiment on the day. I'm just going to take my one MES contract, let it ride, do what it wants to do, kind of set a break even, or not a break even, but stop of, okay, if it's starting to test this level here, then I'm out $50, whatever it may be at that point, but certainly not wiping away the spread trade that I've been putting this hard data or research into or trying to put my full focus on, and certainly not anything more than just that one trade. If it does end up stopping me out, I'm not going to be looking to get back in. I'm not going to be trying to sit in front of this computer screen for more than the morning session on a trade base like that, but just looking to kind of win the lottery almost in a sense on those style of trades for days like yesterday that, hey, I'm getting short. I think there's going to be a downtrending sentiment fully on the day. Let it ride. Man, that's like, forget what it was, like 200 points, I want to say, from yesterday, looking at like, getting short anywhere around here, 320-ish, covering close to the end of the day, 100 points at that on a, $5 a point. That's $500 on a $50 margin trade. So it's those types of things that should be, if I'm going to be directional with the S&P 500 with these style of trades on the backside of that spread trade, I've got to first acknowledge that the little in and out scalpy trading that I was doing is not in any relation to the hard back testing and data that I've collected to put in work for that first 15-minute volatility spread trade. Those are totally different. And I think I bled those lines a little bit too much today, blurred those lines, so I felt like, oh, I'm still a good trader because I'm identifying what's being a top here, just going along those lines versus the reality of, it may be the same ticker, it may be the same modality of futures that I'm trading, but it is in no way, shape, or form the same trade. And very hard lesson to learn today. The school of hard knocks that hit me hard, very hard today. Not as hard as we had on that $2,000 day, but that's just all learning and growing in who I am as a trader, and especially with each modality and each pattern that I end up going through more and more. It's having to pay a lot of those stupid taxes over and over again, but not trying to be it over and over again, but just kind of, hey, we're exploring all the ways there are to fail, and the closer we get to running out of ways that there are to fail, the longer we can stay in this game, the more we can give ourselves a better chance to end up finding the actual ways to succeed. Just a funny story that I was referencing of other family members that I was talking to, or just other strangers, people I was meeting, of telling them what I do, and they all say, oh, yeah, you must be doing pretty bad because the stock market's tanking recently, right? And it's just funny how that's always the idea that, oh, if the stocks are going down, then everybody's losing money. And it's just like, no, I don't need the stock market to go down to lose money. I lose money all the time on my own. I don't need the stock market to do that. But yeah, that's just I don't know why that is the rationale for the general public, I guess you could say, with that one. Just a funny note that I wanted to mention, bringing at the closer. But that is all I had today. Got some nice plans going into tomorrow. Excited for that spread trade. I think it is going to be a very nice volatile Friday tomorrow. Fridays are usually the most volatile days of the week, and especially after a hard sell-off day yesterday, hard reclaim day today, I think it is just going to be a kind of choppy, not even a kind of choppy, but a very widespread day throughout the whole intraday tomorrow. I'm still looking for that first 15 minutes for the trade, but of just not defining a hard trend one way or another, but just setting up as a more of a rest day kind of, but just establishing bears that way and kind of using this day here, the 25th of January, after that big volume day, after the hard sell-off. That was 4 red days. We're having the same thing again, 4 red days, big green day. Maybe we see some high top wick and bottom wick action there for the day tomorrow to end the week off. So I will be very excited for that and very excited to continue this journey, and very thankful that I'm still in the game, and through my stupidity and mistakes that I am still breathing in, and I always will be. It is, at the end of the day, always just money. It is fake. It does not define me whatsoever. I am who I am, and I'm becoming stronger of all these events and days like this and learning lessons that I'm able to take, and very grateful for it. And I thank you guys for watching. We will catch you guys on the next one.